Hello ladies and gentlemen, welcome to A1 Money. My name's JJ. I talk all things finance, so let's dive right in. Earnings per share, EPS, is a key financial metric that provides insights into a company's profitability and shareholder value. In this video, we will explore how to calculate EPS, examine an example using Apple, differentiate EPS from dividend per share, and shed light on the significance of these metrics. Understanding EPS and dividend per share is crucial for investors and individuals interested in assessing a company's financial performance and potential returns. EPS calculation example. To illustrate EPS, let's consider the example of a well-known company with $216 billion in revenue and $46 billion in net income in 2016, Apple Incorporated. EPS formula. EPS is calculated by dividing the net income of a company by the number of shares. The formula is as follows. Distinguishing basic and diluted EPS. When calculating EPS, it's important to differentiate between basic EPS and diluted EPS. The basic number of shares represents the existing shares, while the diluted number of shares takes into account the potential effect of convertible securities, such as stock options, convertible debt, and warrants. Diluted EPS and the concept of dilution. The term diluted in diluted EPS refers to the effect of potential dilution on the earnings per share. It accounts for the possibility that all convertible securities could be exercised at the earliest point in time. Calculating basic and diluted EPS. Let's calculate Apple's basic and diluted EPS based on their net income of $45.7 billion. 1. Basic EPS. Divide the net income of $45.7 billion by the basic number of shares, which is 5.47 billion. The result is $8.35 per share. 2. Diluted EPS. Divide the net income of $45.7 billion by the diluted number of shares, often referred to as common stock and common stock equivalents. In this case, the diluted number of shares is 5.5 billion. The resulting diluted EPS is $8.31 per share. Differentiating EPS and dividend per share. EPS and dividend per share are not the same, although they are related. EPS represents the proportional part of total profits that can be attributed to each individual share. It indicates the profitability of a company from the shareholder's perspective. Dividend per share, on the other hand, is the actual amount paid out by the company to its shareholders. It represents the portion of earnings distributed as dividends. Apple's dividend payout. Apple has a dividend payout of 26% of its profit. The remaining cash is retained within the company for future use, such as investments or operational requirements. So to conclude this video, earnings per share, EPS, is a fundamental metric used to assess a company's profitability and shareholder value. By calculating EPS, investors can evaluate the portion of profits attributable to each share. Differentiating between basic and diluted EPS is important to account for the potential dilution effect of convertible securities. While EPS indicates profitability, dividend per share represents the actual amount paid out by the company to its shareholders. Understanding these metrics helps investors make informed decisions and gain insights into a company's financial performance and dividend policies. So that's the video. Hope it was helpful. If it was, then subscribe, give it a like, and let me know your thoughts in the comments section below. Check out this video that's on screen now and catch you in the next one.